Hello friends, very good evening to all of you. I'm extremely pleased to discuss today with you advanced accounting aspects, particularly the ones which are covered under RTP. Like always, I would just like to give you a little context to what we plan to cover in the next 1 hour. And I encourage you to share your questions or any doubts what you have in the comment section so that whatever doubts you have, the objective is those doubts should get clarified and we should have absolute clarity on how we should be approaching our advanced accounting examination. So that's the purpose for which we have this session. So let's get started with our main discussion of advanced accounting. But one point, as I just mentioned right now, right, as quickly as possible, just start shooting out your doubts in the comment section here so that I can prioritize your questions over others, because some students just keep feeling unhappy that their doubts were not prioritized. It's not that I want to prioritize A over B, but hi to everyone. It's not that I want to prioritize A over B, but just that if somebody is asking me question and in the given time, if we can answer only those many questions, that's what we can do. All right. So what is that? S adjustment. So what is that point for accounting standards? I didn't understand what your question is. Anyway, so the way I want to go about with this is, we in our advanced accounting paper will have about 15 to 20 marks from accounting standards and guidance notes. Out of our 100 marks, 15 to 20 marks we'll get from these. So sometimes it is even much more. Sometimes it can even be about 25-30 marks as well. So easily about 15-20 marks we can expect from accounting standards and guidance notes. So what we will do is we'll start with the questions which appeared in the RTP from accounting. But before that, I will just touch upon a couple of amendments which have happened in the banking. So always, as you know, in banks, we have these SLRs and CRR rates. So these SLRs and CRRs, quite frequently, we have to look at the RTP and learn the latest rate. So can anybody tell me what is the latest SLR, statutory liquidity ratio? What is the rate? Can anyone give me an answer to that? That is applicable for our November 2018 examination. What is the rate applicable? Let me wait for 10 more seconds before giving out the answer. All right. So the SLR that is applicable is 19.5%. Okay. So how much time are we live? 1 hour, Pradeep. So Pradeep, it is for 1 hour. So we will learn this SLR, the SLR that is applicable for your exam. I want everybody to have a notes for you to make a note of important points what we discuss. Okay, right. So SLR that is applicable is 19.5% for our November examination. That is what we should remember. Then CRR that is applicable for our examination is 4%. So earlier it was 4.25, now it came down to 4%, and that is what will be applicable. Now, I have an alert for you. Even if RBI gives out some notification or you read somewhere in news some other rate, please ignore all of that. The ones that are given in the RTP are the rates which you have to remember for your examinations. Are we clear about this? Right. Now, so let's get started. So in RTP, as you know, first you'll have all the questions and then you have the answers. So I am looking at question 14 in the RTP regarding guidance note. So the question reads something like this. So the question says, R Limited is engaged in the manufacture and sale of industrial and consumer products. I hope everybody could spot that question in the RTP. If you have not opened your RTP till now, please quickly go and open your RTP. Otherwise, you just have to listen to the RTP, what I am reading out from my material. Okay, right. So I'm reading it out. R Limited is engaged in manufacture and sale of industrial and consumer products. One of its division deals in leasing of properties. This division is continuously engaged in leasing of properties. Now, there is something to note here. This division is continuously engaged in leasing of properties. So leasing of properties is not one-time thing that R Limited does. It is something which R Limited has been doing continuously as one of its divisions. All right. Then accountant showed the rent arising from leasing of properties as other income in the statement of profit and loss. You are required to advise whether classification of rental income made by accountant is correct or not in the light of Schedule 3 to Companies Act 2013. Okay, right. Now, friends, understand carefully whether it is applicable for old syllabus also. Yes, so everything what we are talking about, except a few accounting standards, will be applicable even for old syllabus. So you can also listen to it, Rahul, with equal attention. Right, now listen carefully, friends. So what is the question about? This question is regarding general instructions for preparation of statement of P&L, which is for Schedule 3 of Companies Act 2013. Okay, sir, remove all the big words. Tell me what it is regarding. In simple language, this question is regarding guidance note what institute has given for Schedule 3 of Companies Act 2013. How should we deal with Schedule 3 of Companies Act 2013? So for that, we have a guidance note. Now, what that guidance note tells us is, if there is revenue or some income which is from regular operations. So here, if you talk about these leasing of properties which is on a continuous basis, do you feel that it is something which is a regular activity for the business? If it is a regular activity for the business, then the income from that should not be shown under other income. Income from that should be shown under revenue from operations. I'm repeating, it should be shown under revenue from operations. Now, this kind of a question can easily get tested for 4 marks in your examination. So what is the gist of it, friends? Because renting out or leasing out of properties is a part of the one of the main businesses which this company R Limited has been doing on a continuous basis. The revenue from rental income what R Limited earned should be shown as revenue from operations, but not as other income. Are we clear about this? Right. Now, I have a small improvisation to this question. It is not given in the question. I am making a small adjustment. What if the examiner tells us that the main activities of the business are the first sale of industrial and consumer products, and this company has a smaller division or a much insignificant division which is into leasing of properties. So leasing of property, it's something like, if the main business is 100, leasing business is only 5 or 10. So it is something as small as that. Then how will your answer change? Friends, listen carefully. Then this will go into, it will go into revenue from operations only. You might specifically call it as under revenue from operations, other operating income. Listen, what did I say? I did not say other income. I did not just say revenue from operations. I said other operating income. You can categorize it under other operating income. So this is the point what we need to understand. If everybody is clear about it, I want to move ahead into the next question, which is regarding Accounting Standard 7. Is everybody fine with this? If you have any doubts, please stop me right here and ask me. At least list or specify that you have a doubt in that. Otherwise, I'll proceed to the next question. All right, good. So let me proceed to the next question now. So the next question talks about something like this. It's on AS7. Uday Construction is everybody having a copy of RTP with you right now? That is important. Look at the questions, and that is something which will help you understand how to approach these answers as well. Uday Constructions undertake to construct a bridge for the government of Uttar Pradesh. The construction commenced during the financial year ending 31st March 2018 and is likely to be completed by the next financial year. So it started in one financial year and it will end in the next financial year. Okay. Then the contract is for fixed price of 12 crores with an escalation clause. You know the meaning of escalation clause, right? If any price of steel, cement increase, then our contract price also will increase suitably. Okay. You are given the following information for the year ended 31st March 2018. Friends, I hope you know that in A7, percentage of completion method has to be applied. Okay, so see this, cost incurred up to 31st March 2018 is 4 crores. Cost estimated to complete the contract is 6 crores. So what is the total cost on the contract? What is already incurred plus whatever is what is required to be incurred, both put together, you have 10 crores of cost. Straightforward, right? Now, the next point is, again, somebody is asking me the same question. Pradeep, is it new course RTP? Yes, it is new course RTP, and it wouldn't drastically be different or irrelevant for you. So you can also listen to most of what we're talking, right? Except a few accounting standards. Right now, so let's continue. So total cost, estimated total cost for completing the project is how much? That will be 10 crores. So 4 plus 6, 10 crores. Right now, look at the important point. Escalation in cost by 5%, and accordingly the contract price is increased by 5%. Costs are expected to increase by 5%. Now look at this. Today you feel the cost will be 10 crores, but actually you feel that when you complete the project, the cost might increase. All right. Now here, contract price is increased by 5%. What is the current contract price? 12 crores is the contract price. Now it is going to increase by 5% because the costs have undergone a change. Okay, so total costs what we believe we will incur to complete the project are 10 crores, and this contract price of 12 crores, what we agreed upon earlier, is now going to increase by 5%. If it is going to increase by 5%, calculate 12 crores into 1.05, that comes to 12.6 crores. So you are increasing, plus 5% you add to 12 crores, that will come to 12.6 crores. So the total contract value will now be 12.6 crores. Right. Now, what is the important point to note here? Look at the question. You are required to ascertain the state of completion. Stop here. We will read the rest later. What is the state of completion? Friends, what is the cost already incurred? 4 crores. What is the total cost of the project? 10 crores. So 4 out of 10 is how much? 40%. So stage of completion is 40%. Acha, if you want to share this link with any of your other friends who might be interested to learn these points from RTPs, just quickly share the link and let them come online. Otherwise, every day some people will keep asking questions like, sir, can we do this topic, that topic, which would have probably done in the first 5-10 minutes or 15 minutes. So quickly share that link with your other friends if you think it would add value to them. All right. Now, let us look at it. So percentage of completion or stage of completion is 40%. Now, what is the next one? And compute the amount of revenue. Okay. How much revenue can be recognized? 40% of 12.6 crores can be recognized. So calculate 40%, 12.6 into 0.4. That will be 5.04 crores. So we can recognize revenue of 5.04 crores in the current period. Now look at this, friends. 5.04 is the revenue. And what is the cost that we just now spoke about? 4 crores is the cost that is already incurred. So what is the profit? 5.04 minus 4 crores. 1.04 crores will be the profit for the current year, which can be recognized. Are we clear about this? Right. If everybody is fine with this, I will move into the next question. If you have any doubt, raise that doubt right away. Okay, right. So I'm assuming that nobody has a doubt in this. I'm moving on to the next question. Right. Now, look at another important point. See, one of the reasons why I want to definitely touch upon these questions is RTPs quite, I would say, maybe once in 2-3 attempts, you will have questions picked up straight from RTPs, some question or the other, with some small changes. You may find that in the examination. So when you find RTP questions, you have to solve them very carefully. Right. Now, look at this question. It is on AS9. One more thing, friends. If there are any questions in RTP which you want me to discuss specifically, you can leave those things in the comment section and I will talk about them, or I'll try my best to talk about them in our 1 hour of live. Okay, right. So look at this next question, which is also quite important. From AS9, Fashion Limited is engaged in manufacture of ready-made garments. They provide you the following information as on 31st March 2017. Now, what is the first point? On 15th Jan 2017, garments worth 4 lakhs were sent to Anand on consignment basis, on which 25% garments unsold were lying with Anand as on 31st March 2017. Acha. So now, what exactly is the question? So here you find that on 15th of Jan, we sent goods worth 4 lakhs to Anand on consignment basis, and 25% of these were lying unsold. What is the meaning of goods sent on consignment? See, the question does not say these goods are sold to Anand. You understand the point here? We are talking about revenue recognition. AS9 says if we are sending goods on consignment basis, risk and reward will not be transferred from us to the other party. I'm repeating, if we are sending goods on consignment basis to the other party, risk and reward in these goods will not be transferred. The meaning of that is we still own those goods even though these goods are now sitting with our consignment agent. We still own those goods. Acha. So if we still own those goods, the implication is whatever is sold by the consigner, by our consignee, those goods we will record as sale. But what is the portion which is not sold? 25% is not sold by our consignee. So that 25%, whatever is still lying with Anand, we should not recognize revenue on that. So friends, what should be done? On 4 lakhs, apply 75%. On 4 lakhs, apply 75%. Or from 4 lakhs, subtract 25%. You will arrive at 3 lakhs. So what is the revenue that we can recognize? We can recognize the revenue of only 3 lakhs in this case. Is everybody clear about the point? Now, how will your answer change if the question does not have, see, it is not there in RTP. I'm slightly making a complication here. The goods were sold to Anand. In the question, one small change. Instead of it being goods sent to Anand on consignment and all, simply we say goods sold to Anand. Just small change in the question. How will your answer change? Can anybody tell me? What will your revenue be? If goods are sold to Anand, how much will be recognized as revenue? Can anybody answer that question? How much should be the revenue if the question says goods were sold to Anand, not sent to Anand? What do you mean by sale price? What is the amount which will be recognized as revenue? Write the amount. Write the amount in the comment. What will be the answer? Arey, come on, I want you to participate actively. Whole of, what is that? Arey, write the amount. I want to see exact number. What would the revenue be in such case? Tell me the exact amount. What will go into revenue? I think you guys are taking too much time. Friends, the entire 4 lakhs in that case, yeah, so the entire 4 lakhs, please ask question again. So my question was, if I make a small change to whatever is given in the Bharat, this is the problem if you are a new participator. So just try following what's happening, and from the next question you can catch up. So friends, what we are saying is, in that case, entire 4 lakhs, yes, Rishi Vardhan got it right. And who else got it right? Okay, so I'm hoping that others also understood the logic. So friends, the point is, in that case, entire 4 lakhs will be considered as revenue. So the point what I changed here is, instead of goods being sent on consignment, I said goods sold. Goods are sold. That's all. If goods are sold, entire thing will be recognized as revenue. Whatever buyer has done, buyer consumed them, still is yet to sell, all that is none of our business. Okay, right. Come to the next question. Garments worth 1.95 lakhs were sold to Shine Boutique on 25th March 2017, but at the request of Shine Boutique, these were delivered on 15th April 2017. So we sold before the balance sheet date, but we delivered. At the request of the buyer, we delayed the delivery. At the request of buyer, we delayed the delivery and we delivered after the balance sheet date. So then what is the implication? How much will be recognized as revenue? Entire amount will be recognized as revenue because the delivery was delayed only at the request of buyer. Are we clear about this point, friends? Very, very important from exam point of view. Right. Let us move on to the next point. Okay. Anjali, I heard your, I noticed your question. I will definitely find time to talk about consolidation. Right. Okay. Then there is one other student who spoke about mutual fund. I will answer that question also. Okay. Right. Now I'm moving on to the next case. On 1st November 2016, garments worth 2,50,000 were sent on approval. The period of approval was 4 months, after which they were considered sold. Okay. When were they sent? 1st November. When will 4 months be over? Now calculate. First end of November, end of December, end of January, end of February. By end of February, 4 months will be over. Okay, right. Buyer sent approval for 75% of goods up to 31st December and no approval or disapproval received for the remaining goods. Very good. Now, out of 2,50,000, buyer gave confirmation only for how much? Buyer gave confirmation only for 75% of the goods. And for the balance goods, there was no approval or disapproval received for the remaining goods till 31st March. Okay. Now, look at this point, friends. It's a very interesting case. It has enough slippery slope for a lot of students to make mistake. You know what students might say? Sir, only for 75% of 2,50,000 we should recognize revenue. For the balance, we should not recognize revenue. Is that analysis correct? Oh, Rahul says, no, sir. Entire 2.5 lakhs should be recognized. Why, Rahul? Why do you say so? Because the time given was 4 months. Within 4 months, they should have, yes, that's right, deemed to be approved. Within 4 months, they have right to accept or reject. But if 4 months is over and still rejection has not happened, it is deemed to be approved. If it is deemed to be approved, entire sale of 2.5 lakhs is considered to have been done, and that is why we should consider the entire 2.5 lakhs in our revenue. Friends, I hope everybody understood the points what we discussed regarding revenue recognition. Right. Now, I am moving on to the question regarding related party transactions. See, related parties is a standard which is there for new syllabus. It is not there for old syllabus. So those of you who are from old syllabus, you may ignore this question when you are reading. Okay. Sun Limited sold goods for 50 lakhs to Moon Limited during financial year ended 31st March 2017. After this question, I will do other topics which are of relevance to old as well as new. So hold on, don't go anywhere. Okay. Sun Limited sold goods for 50 lakhs to Moon Limited during financial year ended 31st March 2017 at normal selling price followed by Sun Limited. Managing Director of Moon Limited holds 75% shares of Moon Limited. Okay. Managing Director of Sun Limited holds 75% shares of Moon Limited. Chief Accountant of Sun Limited contends that these sales need not require a different treatment from other sales made by company and hence no disclosure is necessary as per accounting standards. You are required to examine and advise whether the contention of Chief Accountant is correct. Okay. Now, friends, you have to go to Accounting Standard 18. If there are any enterprises over which key management personnel is able to exercise significant influence or control, then such enterprise is also a related party. If you have not learned this, please go and refer to our accounting standard on AS 18. So I gave beautifully lot of examples which will help you understand how to identify whether something is a related party or not. So in this case, this is a straightforward case of related party because the managing director has significant interest in that other company, and this company called Sun Limited is doing a sale transaction with the of 50 lakhs with that company called Moon Limited. So both the parties are related, but I'll tell you how to answer these. First, you have to establish that these are related parties. Second, you have to check whether there is a transaction between these related parties, and then you should talk about whether this transaction requires disclosure or not. So here, first you should establish as per AS 18, there is a key management personnel who has significant influence on that enterprise. That is why that party is a related party. Then you should talk about in this company, Sun Limited has done a sale transaction of 50 lakhs with Moon Limited, which is a related party. So that transaction of 50 lakhs of sale with related party requires disclosure in the notes to accounts. That point you should establish. Right. Now, then you should say whether or not the selling price is at arm's length price or normal selling price, disclosure would be required. You should talk about this point also. And now comes your conclusion. What is the conclusion? What is the chief accountant saying? Chief accountant is saying no disclosure is required. The question is, you are required to examine and advise whether contention of chief accountant is correct. Contention of chief accountant is incorrect. That is your conclusion. Okay, right. Now, friends, let us move on to the next question. So the next question is regarding leases. I want to kind of alert everybody who is listening to these sessions on one point. Almost in every examination, you will have question from leases. I would say almost in every examination, you will have question from leases, and I want you to be super thorough with leases. And leases is one of the easiest accounting standards what we have. Don't think it is difficult. It's very easy. You just need to understand the logic. If you want to by heart, you can't by heart leases. If you want to understand the logic, leases is one of the easiest accounting standards what we have. I explained leases for 3 hours or so, and I believe when I read all the accounting standards, because students love asking this question, sir, which are those standards which are more important, etc. So I want to give you an alert that leases super important, super duper important. Okay, right. There is a question. Google Pyramid is asking, even though sale is based on normal price, the accountant should disclose it. Yes. Oh, it's not a question. It's just a comment. And Annamala is asking, sir, does KMP have same definition as what you have in Companies Act? So Annamala, so the definition is as per Accounting Standard 18. And when you learn Accounting Standard 18, you have exactly what the meaning of KMP is. You find that covered. Okay. All right. Now, let us move on. So here, leases. So what is the question on leases? ABC Limited took a machine on lease from XYZ Limited. The fair value being 10 lakhs. Economic life of machine. So fair value is 10 lakhs. ABC took it on lease. Then economic life of machine as well as lease term is 4 years. So you have clarity on the lease term, which is for 4 years. At the end of each year, ABC Limited pays 3,50,000. Look at this, friends. It is for 4 years. And every year ABC is paying 3,50,000. Hurry, if you pay 3,50,000 for 4 years, just see how much you are paying. You are paying almost 14 lakh rupees, right? If you just don't do discounting, you're just paying almost 14 lakh rupees in undiscounted terms. Okay, anyway, let us move on. What else is given? Lessee has guaranteed a residual value of 40,000. Oh my God. Even after all these things, lessee guaranteed 40,000 of residual value. Okay, then what else? However, XYZ estimates that residual value of machine will be 35,000 only. XYZ believes that residual value is only 35,000. The implicit rate of return is 16%. Basically, it is the IRR of the lease, which is only 16%. Friends, I know that some of you, for calculating IRR, you have a big formula. It is not required. Refer to our video modules on leases. You will understand without any formula, just with a simple timeline, beautiful logic, you can exactly arrive at what the IRR is. Okay. So you can refer to our videos on leases for understanding that. Okay. Then the implicit rate of return is given and PVFs are given. Okay. Now, what are you required to calculate? You are required to calculate the value of machinery to be considered by ABC Limited and the finance charges for each year. That is what we are supposed to calculate. Okay. Now, value of machine, go back to the principle as per AS 19. Lessee should recognize lease asset at the inception of lease at the lower of the two amounts. What is that amount? It is the lower of present value of MLPs from lessee's point of view or fair value of the leased asset. present value of MLP from lessee's point of view or fair value of the leased asset. Who is this? Okay, Anjali, what is arm's length price? See, when I say arm's length price, it is a price between two parties who are knowledgeable, who are willing to transact, who are independent. So it is not a price which is biased by our relationship. Okay, right. Then Vikal Bajpayee is asking, can you put the link of leases in description? Okay. Vikal, so you can just send a message to IndigoLearn and you will get link to the course module on accounting standard 19. You can just send that and you will find it. Okay, right. You may know what's difference between rebate on discounting and interest. Okay. Prithvi, let's hold on. I'm just explaining a question. After this, we will talk about it. So now, so that is the principle what we have as per accounting standard 19. Now, what is the fair value of the leased asset given? You have in the question that fair value of the leased asset is 10 lakhs. Okay, keep it aside. Now, imagine there is a timeline. Okay, imagine there is a timeline. Now, what are we supposed to calculate? You are supposed to calculate value of machine that has to be considered by ABC. Means we have to calculate fair value of 10 lakhs, we know. Present value of MLP from lessee's point of view, we need to calculate. How do we calculate that? Just plot all these cash flows on timeline. At the end of first year, 3,50,000. At the end of second year, 3,50,000. Third year, 3,50,000. Fourth year, 3,50,000. But at the end of fourth year, after 3,50,000, you also have 40,000 rupees. Okay. So now you have all these things, all these items plotted on timeline. Now discount these by applying the present value factors. First year, apply what is given here, 0.8621. Second year, apply discount rate of 0.7432. Then third year, 0.6407. Fourth year, 0.5523. Like this, fourth year cash flow is 3,50,000 plus 40,000, total 3,90,000. So discount all these to present value. Compare this with 10 lakhs. So I found that it is something a little more than 10 lakhs. So before the session, I was just calculating it. It is some 1,000 rupees more than 10 lakhs. So 10 lakhs or this, whichever is lower. So which is lower? 10 lakhs will only be lower. Did you understand the logic as to how this has to be calculated? You are putting all this on timeline and plotting those cash flows, and you're discounting all those to present value at the present value factor is given in the question. So Annamalai is saying 10 lakhs, 9,000 something. Okay. So yeah, so it's approximately some 1,000 rupees more than 10 lakhs I found. So anyway, we will, maybe your calculation is right. Let me not debate on that. So whichever is lower, 10 lakhs is lower. So asset should be recognized at 10 lakhs. That is the first point what you need to understand. Now, what is the next part of the question? Finance charges for each year. What is the logic for finance charge calculation? Friends, it is something like we gave an asset, or basically here finance charge, you have to calculate an asset worth 10 lakhs or a loan. Let me just call it as loan. A loan worth 10 lakhs as if we took, and we took it at the beginning, and every year we will calculate what is the interest portion, what is the principal portion. Like that you are going to do the calculation. Now, lease installment is clearly given to you 3,50,000. Now listen carefully, friends. At the beginning, concentrate. If you get this logic, this problem is over. This kind of problems can get tested for 8 marks also. It need not just be a 4 marks question. This can get easily tested for an 8 marks question. Now, at the beginning of the loan of this transaction, you must be wondering, sir, suddenly why are you calling it as loan? Friends, in finance lease, the lessor is like a person who is a seller of the asset plus a person who is like a lender, and lessee is like a buyer plus borrower. Okay, so this we discussed in detail as a part of our leases. So what you should do is you should see from lessee's point of view. It is as if lessee took a loan. Loan from whom? Not from bank to buy this asset. Lessee took a loan from lessor to buy this asset. Okay, right, something like that. How much of loan we took? We took a loan of 10 lakhs. Okay, now what is the interest rate? 16% is the interest rate. Apply 16% on 10 lakhs. it will be 1.6 lakhs. Correct or not? 16% on 10 lakhs is 1.6 lakhs. So first year interest is 1.6 lakhs. Are you clear about that? First year interest is 1.6 lakhs, or I will call it as finance charge. Okay. So first year finance charge is 1.6 lakhs. Now, totally what is the installment that we are paying? 3.5 lakhs of installment we are paying. Out of 3.5 lakhs of installment, the portion going towards interest is 1.6 lakhs. So how much must be going towards loan repayment or principal repayment? Principal repayment must be 1.9 lakhs. Okay, 3.5 minus 1.6, 1.9 lakhs must be going towards principal repayment. You will enjoy this session more if you also have rough notes with you, if you are also having a calculator with you, if you are discussing these points actively, calculating them when we discuss. Okay, right. Then what will happen to the closing balance? In the closing balance, you will say 10 lakhs minus 1.9 lakhs, 8.1 lakhs will be the closing balance. So like that, next year you will apply 16% on 8.1 lakhs and so on. And friends, when you continue like this, towards the end, what you should notice is, what is the guaranteed residual value? Yeah, approximately close to 40,000, somewhere around that must be the closing balance at the end of 4 years, and that will be paid to the lessor by lessee in the form of guaranteed residual value. Okay, so this is how you need to approach it. So first year finance charge you got, it is 1.6 lakhs. Like that, you can go on calculating the finance charge. Okay, right. Now, friends, let us move on to the next question. Let me just do one small calculation to be sure that what we are talking is appropriate. I'm just doing one small calculation. Just hold on. Just hold on, friends, for a moment. I'm just cross-checking whether what we have done is okay or not. The calculation, just give me a moment and we are good to go. Okay, right. So that is done. So this is the what we have discussed is the correct answer. Right. Now let us move on to the. Just hold on, guys. Okay. Sorry, guys. My son barged into the recording, so I couldn't help it. Right. Yeah. So let me just move on to the next question. So this is about leases. So I want to now answer a few more questions which are posed by the students here. So let me go to the consolidation question and let's take that up and discuss the points which are there in the consolidation. Okay. So let's read the question on consolidation, friends. Everybody please come to question number. Where did I miss it? Yeah. Question number 13. 13 is consolidation. So please come to question number 13 on consolidation. Now, friends, the question reads something like this. X and Y are the companies. X is the holding company, Y is the subsidiary company. And you have the balance sheets of both these companies. And straight come to the assets. In the assets of X Limited, we find 4,50,000 equity shares in Y Limited purchased on 1/4/2016. Okay. So what is the current financial year? 31st March 2017 is the current financial year. So at the beginning of the current financial year, purchase happened. Okay. Right. Now, what is the number of shares? 450 lakhs. So what is the total number of shares which we have in Y Limited. Look at that. 10 rupees is the face value of share, right? So 10 rupees is the face value of share. So what is the percentage of shares that we have in Y Limited? So make a calculation, friends. So 450 out of 800 is the percentage what we own in Y Limited. Are we clear about it? Unless there is any information about bonus shares, 450 out of 800 is what we own in Y Limited. Okay, right. So you can just leave it as 450 out of 800. That is fine. Now, move on to the next point. What is given in the additional information? Acha, in the reserves and surplus, what do you see? You see general reserve, you see P&L account. So both those things will go into analysis of profits. Then 15% preference shares of 10 each fully paid up. Can anybody tell me which special point will be covered here because of preference shares? Can anybody tell me which special point will be covered? If you already watched my videos on consolidation, you should easily tell me because of these preference shares, which special point would be covered? Anybody? All right. I really want you to go and refer to our videos on consolidation if you have not already listened to those, because the consolidation videos are extremely important and you have a sure shot question in your examination from consolidation, and we want you to be sure that you are getting full marks in consolidation. Now look at this. Here in consolidation, the preference share capital related point what you see is giving you a hint that para 27 of accounting standard 21 should apply, where even if the question doesn't talk about preference dividend being paid for the subsidiary company, you have to consider that as per para 27 of accounting standard 21, preference dividend is paid or preference dividend is to be deducted. So that adjustment of para 27 of AS 21 we need to do. I discussed this at enough length in our consolidation sessions. Okay, so that is one special point what I want you to notice here. So when you are talking about analysis of profits of subsidiary, you should also make sure that preference dividend is deducted. Preference dividend must be deducted mandatorily from the AOP. Okay, right. Then reserves, of course, will go into analysis of profits. Then now come to the additional information. Now look at this. 10% dividend on equity shares was declared by Y Limited on 31st March 2016 for the year ended 31st March 2016. Now look at this, friends. 10% dividend was declared by Y Limited on 31st March 2016 for the year ended 31st March 2016. What does it mean? For this current year, it was declared in the current year. Okay. Then X Limited credited the dividend received to its profit and loss account. When did X Limited purchase the shares? Go to the balance sheet. X Limited purchased shares on 1st April 2016. Okay. X Limited purchased shares on 1st April 2016. But now the point is, if dividend was declared, will X Limited receive that dividend? 10% dividend of Y Limited as on 30 was declared as on 31st March 2016. Answer this question. Did X Limited hold shares of Y Limited on the date of declaration of dividend? No. X Limited does not have shares of Y Limited on the date of declaration of dividend. All right. Second question. Does X Limited receive that dividend which was declared as on 31st March 2016? No. Why will X Limited receive it? Because X Limited was not holding the shares on that day. X Limited will not receive the dividend. So even though this is pre-acquisition dividend, you will not, or dividend for period prior to our acquisition, we will not make any adjustment for pre-acquisition dividend, because pre-acquisition dividend assumes that, or pre-acquisition dividend related adjustment is required if dividend was received, then that dividend was wrongly credited by the the dividend was received, then that dividend is a pre-acquisition dividend, and that pre-acquisition dividend so received was wrongly credited by the company, holding company which received, to its profit and loss account. If all those three conditions are met, only then rectification has to happen. Otherwise, rectification need not happen. Now, if you have not learned consolidation earlier, I don't think just doing this revision discussion will help you. If you have already learned consolidation, it will help you. If you have not learned consolidation, it is good that you go and learn that, because it is a topic which definitely gets tested, or which is a high probability of getting tested for about 16 marks in our examination. Right. Then what else we have? Credit balance, we have general reserve, we have, and we have an adjustment regarding revaluation. Let me touch upon that point. Revaluation gain or loss will be treated as a pre-acquisition item. Depreciation impact of revaluation will be treated as a post-acquisition item. This is not something to be by-hearted. I explain the logic to this point in our videos, which if you already listened to, you would have understood. Then the other item is included in trade payables of Y Limited are 50 lakhs of goods supplied by X Limited. So trade receivables, trade payables, you have 50 lakhs. So remove it from asset side, remove it from liability side after incorporating. So basically, this is more like a contra adjustment what we should do. Similar items we do even in amalgamation chapter. Okay. Then what else? Very important point. This kind of adjustment can come even in amalgamation. On 31st March 2017, Y Limited's inventory included goods of 150 lakhs, which it had purchased from X Limited. X Limited sold goods to Y Limited at cost plus 25%. So the stock which is remaining unsold in the who purchased? Yeah, Y Limited purchased. So who made profit? X sold to Y. So X made profit. So where is the profit sitting? Profit must be sitting in the standalone P&L of X Limited. It must be sitting in the standalone P&L of X Limited. So it is sitting in the P&L of X Limited, and correspondingly it is sitting in the stock of Y Limited. It is sitting in the profits of X Limited, and it is sitting in the stock of Y Limited. So we should remove it from consolidated P&L. We should remove that profit, and corresponding from stock also we should remove that stock reserve, which is basically the profit. Then what is the other item? That's all. Yeah, that is the only thing. So there is nothing else. So these are the adjustments what we need to do. Oh, look at this point, friends. You are required to prepare consolidated balance sheet of X Limited and its subsidiary as on 31st March 2017, giving workings, ignoring dividend on preference shares. You know what? Because that point is given, para 27 adjustment you will not do. If the small point in paragraph was not given, you compulsorily should have carried out the preference dividend adjustment as per para 27. Are we clear about it? Okay. So I just gave an overview of how you have to consider consolidation questions. Then let me look at other questions. Sir, may I know the difference between rebate on bills discounted and interest and discount in financial statements? Okay, quickly listen, Prithvi. Basically, interest and discount account is income account. Just write clearly next to it. Interest and discount account is income account. Okay. Then rebate on bills discounted is income received in advance account. It is income received in advance account. Now the point is, imagine in the current period we received income of 100. Out of 100, there is some 20 which is for next accounting period. Then what should you do? You would have received 100, right? So if you drop interest and discount account, see, by bank you received 100. So by bank you will write 100. But what is the ultimate amount from this income account which should go into P&L? Only 80 should go into P&L, because 20, even though it is received, it is not for current period. So that 20 should be credited to this income and debited to, it should be debited to this income account and credited to rebate on bills discounted. And what will happen? 100, whatever you received, you have credited to income account. 20 is debited. Net impact is 80. Only 80 will go into P&L account. Clear? Now, that 20 which you credited as income received in advance. When I say rebate on bills discounted, just read it as income received in advance. So that will have income received in advance is like liability. That liability will be carried into balance sheet and also will be carried forward into next year. So in the next year, that opening liability, whatever you have, that will be transferred to income. Means it is income for next year. No. So income for next year means it will be credited to next year's P&L. So it will be transferred from rebate account to income account. So what will happen in the next year? In the next year, from rebate account. In the rebate account, what will happen? By balance brought on, you will have 20 in the next year. Immediately on the same day, you will transfer this 20 to income and expenditure. You will transfer to interest and discount account. You will transfer this 20 to interest and discount account, and the rest of the story will continue. So that is how you are supposed to do it. I hope Prithvi understood the logic. And profit after current cost adjustment, whether this profit will be considered as after deducting interest on debentures, or is it because ICA answer says it is already deducting interest. Sanchit, I didn't really understand your question. So please send out a separate message or a mail, or on your IndigoLearn, if you're on your IndigoLearn, so there will be a chat section or a mail section where when you have doubts, you can just answer those, or you can ask those, and that will be answered. Okay, right. Sir, what is liquidator statement? How to prepare liquidator statement? See, I actually answered liquidation related things in great detail as a part of our modules. But anyway, so the point to bear in mind is in liquidator statement, you are preparing what are the amounts which are collected by the liquidator and what are the amounts which are being paid off by the liquidator. So for that, there is a statement which will be prepared. I encourage you, Sethuraman, to see the good thing with IndigoLearn is if you have doubts in any specific topic, you can purchase modules only for that topic and you can learn those topics, so that if you are comfortable with all others, only these 3 topics you are not sure, you can actually buy those 3 and master those topics. Okay, so I encourage you to just get to those, because you just understand how that logic flows, because it's not something I just tell orally. How to prepare that, how to bear in mind the closing balance of cash with every adjustment, how to arrive at the revised closing balance of cash. So all that I explain as a part of the modules, so you can just look into those questions. Okay, right. So broadly, this is what I wanted to discuss. If you have any questions, we will talk about them. Otherwise, we are through with our session. Can you please summarize the method of independent branch? If possible, please make separate video or a separate module available for it. Independent branches. Okay, sure. So thanks. We will bear that in mind, and we will talk about that in a separate module. Okay, then any more questions, friends? And I also want to know, honestly, are you finding value from sessions like this? And is there anything specific that you want to share for understanding how we can improve the way in which we can engage with each other? So are you finding value from these sessions? Guidance notes significance. Why don't you just go back to yesterday's video? Yesterday I actually discussed a video which talks about guidance note. Is guidance note mandatory or not? So just look into that video. You will have clarity on that. Okay. So Chinmay says Karo video was helpful. Vamshi Gaud says very valuable session, sir. Thanks a lot. Okay. Thanks for letting us know. And this is not just to receive some good words of appreciation, but this is also to understand critically from you if there is something else that you believe we have to discuss. So friends, anyway, so today's session ends here. Thanks a lot, and we sign off here. And please post your doubts. And what we will do is, bear in mind, again, on Saturday, next Saturday, with another very relevant topic, we will come up. And please post your doubts and help us understand where you require help. That is what I would. That's what I would say. Okay. And best wishes for those of you who are taking your examinations in November. Stay focused. Thank you very much.